Well, Monday saw US markets recover sharply. In fact, the Dow was up nearly 2%, the S&P 500 up 1.86%, and the Nasdaq up 1.6%. Largely, the rally was led by the banking stocks. In fact, the Dow gained 600 points in a single day. JP Morgan was up 6%. That's the strongest gain JP Morgan has seen since November of 2020. Of course, on the back of some strong commentary suggesting that the increasing rate cycle should aid the bank, and all financial stocks roughly were up. In fact, the S&P 500 saw all its 11 sectors in gains. The financial services sector for the S&P 500 was up 3%, the top gainer in trade yesterday. That's how US markets were. But let's just talk for a minute or two about what the Fed continues to believe. And there was some Fed commentary by the Atlanta chairman, Bostic. And Bostic said that the Fed faces a test to, in fact, to balance supply and demand. He also says that there is a tight labor market and there is a full supply chain effect of the Ukraine war, which hasn't yet translated on the economy. So he does see some amount of more translation of the Ukraine war supply chain woes going forward. He also says that inflation is evolving and it's going to be an important driver of policy going forward. He believes that a diversity of views within the Fed is going to continue to be a challenge, and how that is managed is going to also be important going forward. He also says that the goal of the Fed is not to cause any undue harm or damage to the current job market, which is quite hot according to him. He also says that the Fed is aiming for a soft landing, and that is going to be incredibly hard. He also says that they are open to moving more aggressively on inflation, and a 25 or 50 basis point rate hike even in the month of September cannot be ruled out, even though he continues to believe that one eye of the Fed will be on the jobs market. That's how US shaped up. Moving quickly on to how European indices were looking. Well, they closed higher despite the global growth fears, but largely global markets were higher yesterday. So the FTSE was up around 1.67%, the DAX gained around 1.4%, and the CAC 40 was up around 1.2%. The Brazilian benchmark index was also up around 1.7%. So quite a secular increase. But when we're looking at it in early trade today, well, US futures are largely lower, with the Dow futures down nearly 0.5%. The S&P 500 futures are down around 0.4%, and the Nasdaq futures are down around 1.4%. So clearly there's a reversal at play already, especially after yesterday's rally. This can clearly be termed as a largish reversal. When we're looking at Asian markets early today, as a result, those have started off lower. In fact, the Nikkei is down around 0.4%. The Shanghai down just minor losses for the Shanghai, down just about 6 basis points. The Hang Seng down over 0.5%. The Kospi down 0.75%. In fact, the only index holding on to any gains at all is the ASX 200 at the moment, up around 0.1% in early trade today. Moving quickly on to how commodities are looking. Well, oil has been quite in a whipsaw as well. In fact, currently oil is below that $110 a barrel mark, but that's where it's able to hold out. It's slightly lower in early trade today. Gold is gaining as the dollar continues to be under pressure. Mind you, the dollar index has come off from 104 to all the way back to 102.25. So that withdrawal is seeing gold gaining quite well, and gold is currently at around $1,850 an ounce, broadly where we left it yesterday, but it's gained quite well over the last week or so. When we're looking at bond yields, well, bond yields continue to be under pressure. They're going to be, or they are currently, the US 10-year bond yields are at around 2.85%. So That's broadly how the larger market bond yields are looking at the moment. Lastly, cryptos. Well, they continue to be under very solid amounts of pressure. In fact, the Bitcoin is at the $29,000 mark, well below that 30,000 now, 3% below that, and it's quietly under pressure since the last couple of days as well. That's how broadly global markets are shaping up. The SGX Nifty in itself is up around a fifth of a percent. So definite positive cues coming in for India in specific, even though Asia is largely in the red.